believe that we could be one of the most profitable products in blockchain. There's this vast marketplace of bettors that want to make more than just a 1x, and we can offer that. Kind of our motto is bet less, win more. And then if you're looking for that lottery ticket, you can get that with us.
How do you guys like manage the risk on your guys' platform?
Oh, so this is another good question.
Leverage betting is a new format. Why do you think that this will still be successful and won't be like confusing to a user or won't be less profitable for a user at the end of the day?
So
excellent. Well, we continue here at ETH Denver. Today we're with a product that I personally find incredibly innovative, Levr. Who are you and what do you do?
My name is Blue, otherwise known as Mr. Blue. I am the founder of Levr. Longtime crypto native, been in the space since like 2017 when I figured out that I could mine Ethereum with a bojangled set of graphics cards and then go shit kick all my Ethereum into ICOs and promptly lose all of it. And so, I'm excited to be a part of the space, just looking to bring something innovative to the people, especially with sports betting. I felt like there was not a whole hell of a lot that was more than just kind of traditional books with crypto payment rails. And so had this crazy idea that we could offer leverage to the users, let them bet less, win more, bring something new and innovative to the market. And here we are.
Interesting. So tell me about like the origin of Levr and maybe a little bit of your background can help segue into this.
Yeah, so as I mentioned, I got my start when one of my co-founders convinced me, our CTO, Eternal, convinced me that we could mine Ethereum. We had a building in Texas that we had flat rate power on and figured out that like, hey, we could probably put 20 or so rigs in here and just crank them up full bore, crank the AC as much as we could and go to town on it. And so we did that for exactly a year, bought a pallet of 1080 Ti's, went to town on it, sold all the Ti's to a proper mining outfit out of Virginia eventually and just started going. And that kind of got me hooked, man, right? And so survived through the bear market off of what we had done there. And when DeFi came around, I was like, this is the future, right? Especially for a guy like myself that likes alternative investments and unique products. And so I had been doing a lot of looped farming, was participating heavily on Binance Chain or BSC at the time, right? Shout out to the Ape Swap guys, got me real hooked. And then from that, I had done some consulting for a gentleman that ended up owning a sports betting hedge fund. And so his hedge fund is based off an AI model that he's built and perfected. He's got a PhD and works with a few other PhDs. And they have him and another singular LP on the fund. And so eventually I became their go-to crypto guy, right? And at that point, there was not really anything that they could do in crypto in Web3 for sports betting. It was really just all like, stake and Rollbit to a lesser degree, and Augur had been canceled and whatnot. And so we were looking for kind of like what could they deploy into and get some traction on with Web3 and sports betting. And I came back with a big fat zero. I said, there's nothing really I can recommend you do here. You're not going to get a better deal than where you're currently deploying offshore. And so that led me to think like, hey, maybe we should make something, right? And so we had a few ideas. None of them were really sticking. And one day we were literally in his basement drinking beers, watching baseball games. And I'm mad GMX at the time. Shout out the Blueberry crew, right? They got me hooked on GMX super early. I was sitting there trading on GMX, and I just came to this realization that like, I'm not actually buying the Bitcoin here. I'm just buying essentially a price on the Oracle in the future. And if it goes up, I'm going to get money. And if it goes down, I'm going to get liquidated. Why could we not bring odds on chain and offer a similar leverage style product to GMX for sports betting? Sounded crazy at first, took a few weeks. Eventually, they had a quant that wasn't really doing much for them and had a little bit of downtime. And so the quant, myself, the other founders sat down and just said, hey, can we crack out leverage for sports betting, right? Let's just see if it's even able to happen. So it took us a few months, did a lot of math, a lot of paperwork, and we ended up with a white paper that proved that leverage in sports betting could not only happen, but it would be very profitable to the casino that would run the game. And so at that point, I looked at it and I was like, this is a DeFi product that we need to bring to market. I just switched, made my life's mission to bring it to market.
And what platform are you guys building on, or what do you decide to build?
So we initially built everything out on Avalanche Fuji testnet.
Uh-huh.
Just had a good working relationship with the Avalanche team. They're one of the earlier investors. And we did everything there. So we had launched beta for NFL, and we're live right now on Avalanche. If anybody wants to go test out the product, levr.bet, you can find us. We launched NFL tests there earlier in the year. And then Monad came to market, and we got a real close relationship with Intern.
Mm-hmm.
Midway through kind of 2023, they started talking to us. They had a thesis on sports betting as a primary product for use case on a blockchain.
Right.
And once we understood the kind of functionality and speed with which their chain was going to operate, it gave us confidence that we could build our full clob for in-game trading on chain through Monad. So we're live right now on Monad testnet. And then we also will go live on Hyperliquid as we feel it's appropriate to target kind of the mass of PerpDex users there with a PerpDex product for sports betting.
Uh, so when I think about like sports betting, and I've done like a tiny bit of sports betting, so I'm not the most educated person here, but you have kind of like and some odds that are sitting pretty steadily, and then it like jumps up, right? Someone scores a point, and now the odds of that person winning the game, let's say, are much higher. Where like price in crypto moves gradually. And I know that, with a model like GMX, like something that's very dangerous for that type of protocol is when there's like a massive liquidation event or something, a sell off. How do you guys like manage the risk on your guys' platform?
So what really happens there is we have multiple safety checks,
Uh-huh.
right? So instead of running the in-game trading exchange on a forward block, like on the block that's currently existent, we run it on the block behind. So it prints to the chain one block after it should, right? If it was running actually fully on chain, it's a hybrid system.
Right.
And we have a safety check that no one can sell a position that should have been liquidated before the position is able to be sold or before the position is able to be cashed.
I see.
So if there, essentially what happens is we convert the odds into a pricing formula within the back end on a scale of $1. So like an even money bet for any game would be a 50-cent token price that you're going to purchase pregame.
Mm-hmm.
And then as the course of that game goes on, the price will go up and down. And so if you think of like a 50-cent bet on 5x leverage, you technically have 10 cents of collateral backing that 50-cent token. And so if the price in converted odds falls to 40 cents, we're going to liquidate you.
Mm-hmm.
That's an oversimplification of it, but that's basically what happens. And so then as soon as that token or anyone holding those tokens that has 5x leverage is pegged at 40 cents price or breaches that threshold, they no longer have possession of them. We take possession of the tokens.
Right. So where like theoretically GMX you might be able to get like the price and you could get your trade out with Levr, like you're liquidating before you have a chance to kind of like go underwater on a specific.
Yeah, exactly. Like as soon as your health factor reaches 0, we peg you for liquidation. And even though it might not be fast enough to catch stuff because of the block delay, and more importantly, the safety check at the end of the game to make sure that no one can redeem those tokens for $1, then it's pretty much foolproof. And we've tested it extensively at this point. It's worked every time.
Right. So with like online, well, really crypto betting platforms, and we've seen a lot. You've mentioned a few, Stake, Rollbet. Uh, they look quite different to kind of what you guys are building. The first one is around like the LP model, like the liquidity model. You guys have a pool that takes the other side of the trade, right? Or trade bet in this case.
Yeah, so think of it as like a pooled liquidity vault.
Mm-hmm.
It'll initially be USDC, and that's the technical counterparty to all bets. And so really, if you want to understand the product a little better, let's look at it as kind of like a 3-tier system. The first is pregame. Pregame, users come in and they purchase positions. Those positions have pricing that's dictated by odds. The odds are pulled in from an oracle that we've built custom to us
Mm-hmm.
that aggregates together top casinos by volume into one price feed. So we take like, think of GMX would take Bybit, shout out Bybit, sorry guys, Binance, OKX price, and maybe Uniswap, aggregate the price together from whatever they're offering on that, and that would be the price that a user is paying for the position on GMX or on any other perp dex. We'll take Caesars and Pinnacle and Circa, and we'll aggregate their odds together so that we get a more a close to true odds representation, and then we'll offer pricing on that pregame. Users can select right at this point between 2 and 5x leverage. And so those positions are technically countersided by the pooled liquidity vault. And for taking that risk, the pooled liquidity vault receives approximately 50% of the overall platform revenue in USDC back into the liquidity pool. Okay. Right? Once the game starts, we close positions that are being bought versus the house, and we open up the order book market for users to trade positions back and forth. Mm-hmm. So technically, once the game is live, the only way you can get a position is to place a bid and get the position from another user.
Oh, interesting.
Right? And if you want to sell a position, the only way to sell it is to to sell it to another user. Right? So there has to be a buyer.
And then that's completely like market-based price.
It's all market-based pricing at that point.
Interesting.
And then we run a market maker bot on our own order book to help facilitate liquidity into the market. So think of it as like a cash out function on a traditional book, right? Where if like you go to FanDuel's and you make a parlay bet and you're sitting really good, they'll buy it back for you for like 50% of the price or 75% of the price, right?
Right.
We use roughly similar math for our cash out feature, and that provides a floor and a ceiling to the order book. So in simple terms, if somebody wants to sell a position for a deep discount, we should probably buy it back. And if somebody wants to buy a position for a massively overpriced amount, we should probably sell them that position, right? Mm-hmm. But other than that, it's all market dictated. Separately from that order book is an oracle feeding into the liquidation engine. And the liquidation engine is using the same pricing conversion as we do pregame. And if your price falls below a certain point where you have 0 health factor left and you've depleted your collateral, we liquidate your position, and those tokens are no longer available to be redeemed at the end of the game. The game goes on, people sell positions, they buy positions, they're liquidated. Whoever's left standing at the end of the game is then able to redeem their winning positions for $1 per token from what they were sold pregame. Mm-hmm. Now we have settings so you can look at the tokens in either the dollar scale, Asian odds, decimal odds, American odds, but under the hood, it's all working on a dollar scale. Okay. Right? And so again, it's pregame versus the house, in-game liquidation engine running with a separate data feed from the on-chain clob, right? And then post-game, a redemption mechanism that's running based upon the oracle on which side is validated as the winner.
And then are the proceeds from the market making and liquidations, are those going to the like liquidity pool as well?
So it's two different things. The proceeds from the liquidations go to the overall platform revenue. Mm-hmm. The market maker bot is programmed to run neutral. So basically, and it runs over a set time frame. So not like one game. Think of it in like 10 or 20 games.
Right.
If it's making cash from market making sales, it will just get more lenient on future games.
Mm-hmm. Interesting. I know sports books traditional sports books tend to be like very, very strict about like arbitrage flows. So essentially they'll cut off profitable bettors who they think are performing arbitrage on the platform. Do you guys have anything like this, or are you like completely let anyone come on trade on the
platform? We actually have the opposite of that. So again, PerpDex model, we have a set amount of liquidity that we provide to each game pregame. Anybody can come and take that liquidity. Mm-hmm. And then the liquidation engine is tested over 15,000 games is what we pegged it into on the NBA model. We've tried to set it up in such a way that anyone can come and participate up to the amount of liquidity that we offer on a game-by-game basis without need to kind of watch for sharps and exit them out, right? Mm-hmm.
And is this flow like toxic to the LPs?
Not at this time. So in our beta test right now, we actually need to make it a little bit more lenient to users, right?
Okay, interesting.
Our target is 15% profitability on capital flow through the book. We're at about 30% right now.
And you want to bring it down because you think it won't be attractive enough to you, like users who lose a lot of money won't come back to the platform.
Yeah, I mean, just the more people are able to take out of it, the kind of more long term success we think we'll have, right?
Uh-huh.
And so the way we look at it is a standard book is charging vig at somewhere between like 2 and 6%, and then a prop bet book or somebody that specializes in parlays is doing somewhere between like 15 to 25%. We want to target more the lower end of that prop betting and parlay house. And if we can achieve that and still be very, very profitable for the LPs, for our token holders, we think that's a good middle ground, right? We don't want to rake everybody over the coals and kind of force them to go away because they lost all their money. We want to make it fun for users.
Right. So you're playing kind of both sides where you want to be profitable, but you also want that to work that retention. Um, Stake basic. Well, there's a lot of kind of crypto casinos, or I don't know if I would characterize all these as crypto casinos, but there's casinos that accept crypto payments, right? That's like the first class. Then we have platforms like Stake, which are more on chain, but aren't like crypto native. Rollbit perhaps is kind of moving there, and then I think you guys are probably like the most on chain crypto native. Why did you kind of decide to take this like very crypto native on chain approach?
Good question. There's kind of three main reasons. The first one is personal. I'm a DeFi guy. All of our founding team are DeFi, right? We really appreciate doing things on chain, building products that are as on chain as you can put them. And that just sticks out as something that we want to continue to innovate and kind of add to the ecosystem of, right? The second, and very, very important for us, is we're bringing a novel product to market here, and people are going to get liquidated. And so, in that, we feel like it's wholly appropriate to be able to prove those liquidations were fair and true versus just having a black box that you have to trust.
Right.
Right. And then, third, to get this thing up and running, we need pooled liquidity into a vault model. And it would be extremely cumbersome and it would hamper the product growth to have to go out and seek that capital from LPs if we were not in a situation where we're on chain and users can just deposit to a vault, right?
Right.
Think of us having to go to essentially existing casino operation businesses and ask for 40 or 50 million dollars to back the product.
Uh-huh.
Probably not going to happen, right?
And is that what like Stake did? Was that the Stake model?
Because they have a little bit more of a programmable output. It's easier to kind of get a loan on that front,
I
right?
see.
When you're a
'Cause
traditional book,
they're like doing like gambling like games.
yeah. And
Right.
so when you do like casino games and slot machines and card games and whatnot, and you mix that in with a sports book, you have a little bit more of a quantified casino operation going
Mm-hmm.
on, and it's proven model that's already worked. We'd be out here with a novel product type trying to convince loan guarantors to give us cash to back this product. Probably wouldn't have gone as well. And also, we feel like, again, we're DeFi guys. We like the perpdex model, avid perpdex users across many front. And so we feel like if we can offer a healthy revenue share to users that would deposit into a pooled liquidity vault, it's attractive for them, especially when you talk about USDC. Our models, our aim is to get somewhere between 100 and 200% revenue back to the users in straight USDC for the vault depositors on a yearly basis,
Mm-hmm.
right? And so with that, we think we can get enough capital to run the product successfully, and likely at the end of the day we'll have to like shut off the capital deposits at some point for capital efficiency reasons.
Interesting. And how does the protocol itself make money?
So the rough split right now is that about half of the revenue is scheduled to go back to the pooled liquidity vault. The other half of it is going to be split amongst Levr token stakers in a similar manner to like you stake GMX, you get revenue from the product. Percentage of it will come to us as an operational budget,
Mm-hmm.
and then some of it will go to a referral platform so that users that refer other users into the platform can share in some proceeds of the product.
And then does this entire model depend on like the net better being unprofitable and you guys like aren't taking a fee or a vig, or do you guys take a fee?
Oh, so this is another good question. What we figured out is because I believe at this point we're the only book in the world that makes majority of our revenue off of borrow rate. right? So we charge borrow rate on the positions over the course of elapsed game time. So think of like a NBA game has 48 minutes, right? So 48 minutes is 100% of game time. If there's extra minutes, it's going to be roughly 2% of extra borrow rate per minute above that, right? And that's elapsed game time. So because we charge borrow rate that increases obviously at 5x leverage, you're paying more borrow rate than you are at 2x leverage. We don't need to rely upon VIG as heavy as other books. In fact, we believe that we can run with zero VIG on our lines. So if you come to us, you should be getting the best line available on any book at any time pregame, and you'll be hit with fees based upon your dictated usage of the platform.
So it's kind of like a funding rate in DeFi.
Yeah, exactly, right. And so our funding rate is more like a skew, right? If it gets really out of whack on one side, and let's say we have 100 grand in imbalanced liquidity that we can offer on a game and on a specific market, let's say like a money line on a NCAA March Madness game or something, and that gets up to $75,000 in deployment. That final $25,000 will become more expensive, and it'll look like a VIG, but really what happens is the VIG is injected into the other side so that we can keep liquidity going.
Right.
And then there's a borrow rate that's dictated based on the amount of leverage that you take and the amount of time that you hold the position.
Okay. Talk to me about like building out this product and go to market.
All right. So building out the product has just been I don't want to say a challenge. Let's say a journey, right? We started the initial conception of it in early 2023, late 2022. It took us quite some time to strap up a team, get some funding in tow. But now we're actually getting ready to near end of our seed round. So our second fundraise with some really strong backers that'll be announced later, which let us strap out and kind of get a full team together. And so once we got the full team together, we've been building and testing and building and testing and building and testing nonstop here for kind of the last year and a half. We've had an MVP product ready, but it's taken some time to perfect. A lot of that's due to the intricacies of putting unique data on chain and just trying to perfect the product, make sure everything's profitable, make sure everything functions properly. But now that we're at the point where we've brought the product to public, kind of the flow path that we're on is we need to beta test everything heavily. And we need to do it on a sport by sport basis, and we need to do it individually for each chain that we're going to operate on. So over the course of the next few months, we'll be running what we call the preseason for Levr. And that's really just a beta test, and we're not telling users exactly how, but it will be incentivized with a future Levr airdrop, right? And so we just want as many users to kind of get in there and participate as possible to help us get as much data as possible on what's going on behind the scenes on the platform. And like I said, we're already on Avalanche. We're already on Monad testnet. Soon we'll be on Hyperliquid's mainnet. And we'll rock those for a month and a half, 2 months, something like that. We'll get our audits done and make sure that everything's functionally sound within the product. At that point, we'll move to turn on cash bets. And then we actually have eyes on proving the product out in Web3 and then bringing it in retail form on a mobile app to the masses. Right?
Yeah, I'm very curious about that component, right? Like sports betting has obviously been this massive phenomenon over the last like maybe 10 to 15 years. And I actually interviewed previously one of the founders of FanDuel.
Nice.
Yeah, so that was
a favorite of our team.
An interesting interview. But obviously, like, okay, we have this crypto native contingent, sure, and probably many of them are interested in sports betting. However, like the real blue ocean is for the masses, right? Especially with an innovative product around sports betting. How do you plan on accessing these users?
So the way that we look at it is we have to make sure that we bring to market when we get to retail a fully functional product that's tested, that's funded, that there's already activity happening on, especially with stuff like the on-chain order book during the live game, right? And so for us, once we get through the beta test period and the initial cash bet period and the vaults are funded, at that point we have a functional product. There's money moving through it. There's cash to back the positions on a game by game basis. We've turned on all the sports. It's a go 100%, right? Then we can bring that product to market in a vastly simplified and abstracted way to the public. And hopefully what we think can happen is something similar to like DraftKings,
Mm-hmm.
FanDuel's, and the like, where they came to market with the kind of fantasy model and then added in other bet types as they got users. We look to come to market with the leverage model and draw users in with a unique, innovative bet type that pays them more on average than they would get if they made a parlay,
Right.
right? And as we capture users on that model, we'll start offering ancillary products to secure them. So, like if somebody wants to play a crash out game or they want to make a standard bet or they want to make a prop bet or a parlay, we should probably offer that to them eventually,
Mm-hmm.
especially after we have them secured in from the traditional lever model, which is the leverage betting,
Right.
right? And so we think referral platforms will be really big for this. Again, abstracting away the blockchain components so they can just come in and act as if they're in a normal book that they've seen and trusted before. But under the hood, everything's DeFi.
So, like, do you imagine that this will be like a separate product, with the example of parlays? Will it be a separate offering, or will it also be on like the leverage bet model?
You know, if you were asking our lead quant, he'd say that we can do all this on leverage and that we should,
Uh huh.
right? To be truthful, we just haven't had enough manpower and time to kind of get there and see if we
Right.
actually can offer parlays or prop bets on leverage. We believe we can, right? Everything should work functionally sound under the same math. The trick is going to be getting the right data for it, right? And data it's funny, we started this project about the time that data became extremely available for the type of data that we would need to run the project, just coincidentally, right? And so we're starting to accumulate really good relationships with data providers, and from those relationships we can start asking for more unique data that could help us run stuff like prop bets on leverage,
Mm-hmm.
right? But at the end of the day, we got to get one foot in front of the other and get the main product out, the main product extremely functional and extremely profitable to everyone. And that just opens up the doors so much more, right? I believe wholeheartedly that we could be one of the most profitable products in blockchain, right? I mean, if you think about a year where we're running $200 or $300 million in capital through the book, and we're making on that roughly 15%, that's some good cash flowing through it, and that gives us a really big war chest to then even paying half of that off to stakers and in the liquidity pool and a portion off to token stakers. It still gives us a nice operational budget that we can go out and do stuff like put ads on pitch on soccer games and do mass marketing campaigns and bring in more users, develop more product, and offer more unique stuff.
I often think of founders as having to have like, take a directional opinion or have like a real thesis. It's similar to like the way VCs or crypto traders operate. I think if I had to condense your thesis, it's not just around the viability of like an on-chain sports book, but also the viability of this new product that you're bringing to market, which is like leveraged sports betting. Why do you have such conviction in this model, right? Given that there are so many like existing formats of betting products, really, that are so popular, right? Like the parlay, or there's a bazillion of them out there that are incredibly popular. The prop bet, leverage betting is a new format. Why do you think that this will still be successful and won't be like confusing to a user, or won't be provide negative value to the user? Be less profitable for a user at the end of the day.
So the way that I look at it is the growth of parlays and prop bets over the last few years, especially since like the COVID lockdowns and the proliferation of online sports betting, gives us great kind of incentive and confidence that we can pull off something like this.
Mm-hmm.
So for us, we look at it as there's this vast marketplace of bettors that want to make more than just a 1x, right? And we can offer that. With the model that we have, uniquely, we can offer something. And so we put ourselves in direct comparison to like a prop bet or a parlay more aptly.
Mm-hmm.
And so if you look at a parlay, normally you're making a multi-game parlay, right? And that takes over the course of 1, 2, or 3 days sometimes to pay out. We can offer users that same thrill, the same payout, likely better payout for the money down and the risk profile, and we can still make roughly the same profit as one of those books or one of those offerings would make, but
Wow.
we can do it over the course of a single game by offering them leverage. So imagine a day of Sunday football, right? You can make multiple leverage bets on the morning games. You can make multiple leverage bets on the afternoon games. You can make multiple leverage bets on the evening games. That for us is just more fun, more profitability chances, kind of more dopamine hits that the users can get over the course of a single day of betting versus making a parlay bet that takes 3 or 4 legs and it's going to be throughout the course of the day. So kind of our motto is bet less, win more, right? And you can bet less times, you can win more money than you would normally on a money line or spread or an over under. And then if you're looking for that lottery ticket, so to speak, you can get that with us. I'll give you a unique scenario here. One of our testers during the MLB playoffs was able to purchase a position, believe it was a Mets game, like one of their games before they hit a home run in the 8th or ninth inning. He was able to purchase a position for like 12 cents off the open market. The Mets immediately hit a multi-run home run, maybe 2 to 3 minutes after he purchased it. He's able to walk out of the protocol with a 40x on his cash down, right? And that was with no extra risk to us. It was a positional sale on the order book. That guy, if that happens during live cash betting, that user is going to be thrilled and they'll never leave our product.
Right.
And they're going to tell everybody they know.
And really, we've seen a lot of this kind of like form factor achieving great success in crypto markets, whether it's like perp dexes or like the advent of this meme coin trading and platforms like Pump.fun, where it's like people are not as interested anymore in like 12% year to year or something. They want to have the lottery ticket, as you said. And I think that's like a very powerful product, is like giving someone access to the ability to multiply their bet or their position by 10x, 20x, 40x.
Exactly, right. And to me, it's just more fun, man, right? Like you use crypto, I use crypto. We've all done meme coin trading, right? We've all signed up for pre-sales and tried to get in on the tickets. And so like there's nothing, yeah, I mean, think of the thrill of hitting a meme coin, right? You buy something at 500 grand market cap and a day later it's sitting at $10 million or $20 million. You're like, oh, I'm the man. I got this.
Right.
You know, do you round trip it? Probably. If you're lucky, like our some of our team, you get out of there and you hit it. But for me, that's a fun thing, right? And so just bringing more kind of success to the bettors, a fun product that they can play on, it is really enticing to us. And shout out the Pump Fund guys. They share an investor with us in Big Brain, right? And so they've done amazing stuff in the space, and I think they've kind of captured lightning in a bottle at the right place, right time. And my hope is that we can do something similar.
Right. And I think too, with like some of the math you were saying previously around like how you guys might end up cash flowing, over 8 figures, like there seems to be a clear path to that, and then there seems to be a clear demand for products that are really cash flowing, real money in meaningful ways.
Yeah, I think like if you look a year into the future from now, we have every sport active, we're on multiple blockchains, we've got a healthy dose of users. I think last time I checked, amongst all of our testing, we have like 50,000 users that have minted our preseason token and made like 100,000 bets total or something, right? We just posted it on Twitter. If we can keep that type of enthusiasm, even like 20% of it, right, we do really, really well. And on that front, that allows us to get attention, right? If there's a vault that has USDC in it and it's printing 100% APR, 200% APR, some users are hitting, 5, 10, 20Xs on their bets, that's going to get talked about. We're going to get word of mouth around that. Other users will come, it'll snowball. And so that's what we're hoping to achieve here over the next year, is really kind of catch that snowball effect. And we got to start somewhere. That's beta test, right? And it's going well so far. We're thankful for every user that's participated in the product and helped us get to where we're at right now. But there's lots of work still to do, and we're kind of up for the challenge.
So for someone who's listening to this podcast and is curious about the product, interested in making some bets, where would you direct them?
First thing, Levr.bet. That's our site, right? And just go there, hop into the app. You go to the lab, and you can connect to either Monad or Avalanche right now. You can claim 15,000 free PSP to bet with, And then there's a variety of social tasks and partner associated tasks that you can do to get more PSP. You can go, it's no cost other than gas to go and start betting on the product and try it out.
Mm-hmm.
Right. I'd also encourage you to follow us at LEVR underscore BET on X and stay up to date on the latest stuff going on. One of the things I can announce here, a little alpha, is we'll be doing a nice test for March Madness, right?
Oh,
Levr
cool.
Madness, and it'll be heavily incentivized on its own accord down the road. We'll likely do some prizes on it. It'll be its own unique kind of thing, packaged in a box where it'll have its own leaderboard. We'll track all the kind of 64, I think it is, games that'll happen first round, second round, third round, fourth round championship. And so if users want to start fooling around on it now, prime time is they'll be ready for March Madness.
Phenomenal. Awesome. Well, I think that's a great note to end things on. Thanks so much for your time here today. Really excited about the product. It's incredibly innovative, and I'm bullish on kind of your way of thinking, right? Where it's like, okay, we want legitimate value prop to being on chain. We want to be a truly cash flowing, profitable project. We want to have multiple stakeholders. So I'm really excited to see founders like you in the space.
I appreciate it, man. I really appreciate you having us on, and onwards and upwards.
Onwards and upwards. Thanks so much, man.